in international, commercial, and technology law. I'm also the research lead of Digital Technology, Crime and the Law Forum at the University of Manchester. Just want to remind you that this webinar is being recorded. Yes, just allows people to watch back, and the recording would also be made available at the university's channel on YouTube. It's our great pleasure to have Jonathan Reiter here and to give us our last webinar for this term before the end of this year. Jonathan Reiter. Jonathan is currently CEO and data analyst, chief data analyst at Chain Argos, a blockchain intelligence providers. And Jonathan has worked in finance. He was previously a financier at Barclays, JP Morgan, Lehman Brothers, and Nomura in London, and also in various places, including Tokyo. And he's currently now based in Singapore. And Jonathan has two degrees from Brown University, one in computer science and also one in mathematical economics, and also a master's degree in computer science. So Jonathan is going to give us a talk, and the title is the role of third-party intelligence in transparent market. So Jonathan's going to tell us, what the blockchain intelligence market providers do. Among others are the competitors such as the Chainalysis, Elliptic, and what do they do, and what kind of tools and skills and attributes these firms need to have. And more importantly, their relationships with the community, with the blockchain communities, with the society, for example, with the users, such as investors, victims of fraud, and also the law enforcement agencies. In their work, including investigations and prosecution. So Jonathan is going to speak for about 40 to 45 minutes, and there will be opportunity for you to ask questions, and so you can unmute yourself and ask questions at the end of the webinar. We also have the chat on the side, so if you have any questions that you would like to ask, but you don't want to leave it until the end, feel free to have your questions in the chat. But also, we also welcome you and invite you to interact with us, with John, and to ask questions at the end. We will finish by 1 p.m. UK time. So without further ado, John, I would like to hand over the screen to you.
All right. Good morning. Okay, so let me get started. So first, I'll just say this is a quite talky talk. We're not going to go through any actual data. This is just sort of a survey of issues and how we kind of approach things. So I guess that the title here is the role of third-party intelligence in transparent markets. So we'll start really by discussing what we mean by transparent markets. Right? So this could apply to any technology principle. Right? So the essential feature of what we're looking at here are markets where everyone can see everything. Everything here's in quotes, because it doesn't mean everyone can understand everything, can interpret everything. All the data is in a format that can be used. We'll come to many of those issues, but at least in principle, everyone's in the same position to observe. And it's not like a bank. It's not like a murder investigation, where there's information some people have, other people have, whatever it is. So one of the key consequences of that for finance is that a lot of traditional compliance functions can be done with public data. Right? So it's possible to determine if party A is dealing with party B from public data, right? Or at least it's possible to prove that they are transacting with each other. Proving a negative remains challenging. In practice, most of what we're going to discuss here applies to blockchain data, blockchain markets at the moment, because that's the only example that exists of large-scale transacting in this way that's extremely public. But if you have another source of things that are public, you can do similar analysis. Certainly, limited data that's produced by stock exchanges, futures exchanges, people have been able to identify problems before. Right? A lot of equity research is based on analyzing public filings. Right? So it's not that it's completely new from a blockchain perspective, but you can reliably do things that you can't really do when you're only looking at limited filings that are produced in most of the world, most companies now. Okay, so what is blockchain analysis? So this is often called analysis, intelligence, forensics, investigation, lots of other words. And somehow this whole field got attached to the way that data is designed. Right? So blockchains allow a lot of this public data sharing, public transacting, transparency, and then companies that do lots of different things with that data all fall under the same sort of umbrella here, blockchain analysis, intelligence. And if you just look at kind of what those words mean in English, they imply different sorts of things, right? So forensics is likely to be related to looking at crimes that occurred, right? Investigation may be finding where someone's money went or recovering it. Intelligence may be related to doing market research. Similarly, analysis. Is this thing a good investment, a bad investment? Is this becoming more used, less used? What countries are using a given product, right? So there's different kinds of questions that in normal finance you'd think of as, police-related forensic accounting, investment research, trading, that sort of thing. The common thread here is really a scientific approach to analyzing public transaction data. That's the thing that really matters. We're going to strip away the blockchain-y part of things because, again, we're not looking at specific data examples, so none of that really matters for the purposes of what we're talking about here. It's the public nature of the data. That's just the example we've got. Okay, so this specifically is a talk about the role of third parties, right? So what's the specific thing that makes that question interesting? Well, the first thing is that third parties can view what's happening as well as directly related parties when all of the data is public. Right? So if you are a stock exchange that makes public for free in real time every transaction with an identifier for the buyer and seller, your data is as transparent in some sense sometimes as many blockchain things. That's what's different here, that people are able to do compliance surveillance work on a product, a service, a provider that they have no direct relationship with by just retrieving their data. Right? And you can't do that with a bank, with a stockbroker, that kind of thing. Now, because you can do many things with that data, the natural next question is, what do these people do? Right? That's really the question that we're going to explore here. We're going to look at different issues that come up in considering how you can have a business in this area, what makes sense as a business, what the motivations for various people are. And then we're going to go through a couple stories that kind of draw out illustrations of ways this has manifested in the real world that you may be familiar with from the newspaper, even if you're only a casual reader related to these things. Okay, so we'll look here from a forensics perspective. Right? So DNA matching, fingerprint matching, various forensic techniques are very much a thing in criminal investigation throughout the world for a very long time. The data is not public, right? So the police don't publish the images of the fingerprints that they take at a crime scene. There are many very good reasons to not do that. As a result, no one does third-party analysis of these kinds of things. Yes, after a case is concluded, or if someone doesn't like the legal result, you can have labs run your own investigation, run their own tests, try to match things. You see that celebrity murder cases, whatever, in the media from time to time, but you absolutely cannot tell the police, you can't enter my apartment yet, even though it's a crime scene, because my private investigator is collecting data. That's just not a thing that anywhere in the world happens. Here, because you're getting things in real time, you can do different types of analysis very quickly. So we're going to see cases where people can spot theft basically in real time. And the question is, why are they looking? Why do they want to do something about it? What can they do about it? Who might listen to them? Who supports that? Who funds that? Like, those are the sorts of questions. You get completely new types of analysis here. Now, the most obvious problem you can think of when, why don't the police just publish the blood they identify, the fingerprints, is because you could have a tremendous amount of media blaming people for things they didn't do. We see bits of that. Of course, we see misrepresentation, we see fraud, we see all kinds of problems, because these are still systems run by people, right? So you've got transparency, and you have misinformation, and you have confusion, and you have unclear motivations. All of those things come in ways that they generally don't for more secret information. Right. Similarly, you don't have people who do forensic accounting and forensic crime scene analysis. Right? Those are just completely different tool sets. Whereas here, once you set up your software to parse blockchain data, to parse public transaction data, you're able to do all kinds of different things, right? So you can identify solvency with the same tools you might use to figure out who stole some money, right? And those are very different kinds of investigations, very different kinds of problems and teams that would be involved in traditional markets. Here, because there's one common data set, one common data format, the people doing the analysis get to choose what areas to focus on, right? Someone that studied organic chemistry, although there are people who studied organic chemistry at hedge funds, right, are not generally the people that you expect to be looking at balance sheet analysis at a short selling equity investment firm. Similarly, people at a short selling equity investment firm don't go move to work for the coroner, right? I mean, those are not things that overlap. So different career paths, such as it is. Whereas here, oftentimes those things are related, and you'll see people looking at project use, general macro claims about how popular something is, and attribution of theft. And those are just very different things in other parts of the world that get merged here. Some of this looks like third parties doing government or government adjacent things. Right? Now, while you do have, podcasts where people go off and investigate crime, and true crime is a whole branch of, I don't know whether it's fiction or nonfiction. Generally speaking, third parties are not doing crime investigation, insolvency investigation. There's a court supervised process that appoints experts, but you don't have people entirely independently gathering the books of a bankrupt firm and going through them and starting to publish where the money went, who was responsible. And this raises kind of the first, biggest, and most obvious question that you've got here. That's not a business, right? Being the police, trying to identify people who've done bad things, who've stolen money, and we'll come to why most of my examples are negative in a moment. Nobody pays for that. The police get paid by taxes, right? You can have lawyers and you can sue people, and there can be civil action and all that stuff can occur. But, you need to start to question why third parties are interested in this stuff in the first place, right? It says in the slide, are these charities? There are cases where there are charities doing things like this. We'll come to some of this in a minute. There are also cases where charities have been misused in traditional markets to cover up and co-opt bad behaviors in ways that, may or may not be similar, but they're examples people should be familiar with. As a result, a lot of the time, a lot of people that look like third parties are not necessarily third parties. Right? And you want to start to think through that when you're considering a given piece of analysis, piece of data, or maybe engaging someone to do certain types of work. Right? So, okay, this is sort of a summary of things that could be businesses that people could be doing here, right? So the simplest one is to provide tooling, right? You build software, you provide a SaaS solution, you sell someone subscriptions to analytics, you sell people developers to go build tools for what they want. And those are all things that exist in traditional finance, and that's a relatively straightforward business model. You build a system, you get some people to sell that system, you sell that system, you add features your clients like, and you compete with other providers to build those sorts of tools. Your clients can be private sector, public sector, they can be lawyers, they can be traders, they can be exchanges, whatever it is. There are lots and lots of software companies that do that in basically every industry now, because most things are software mediated. But then you've got people who are primarily focused on investigations and explaining, right? So that looks a lot like consultants, asset recovery, lawyers that do sort of insolvency adjacent work, asset recovery adjacent work. And you can see how probably the tools on the inside are similar, but you don't necessarily need a polished front end if you're using it yourself to answer client questions, to deal with asset recovery or insolvency analysis. But you need more bodies to go dig in and do things. So it looks probably more like a consulting firm than like a SaaS business that has a bunch of developers, salespeople. Let's do that. You've also got people who just do research and trade for their own account. So every large digital asset trading firm has some kind of analytics capability, maybe very small. They may subscribe to third parties, but they all have to have something. At a minimum, they need a way to know the prices of the stuff they own, right? Because even if there's no regulatory requirement, the owners, the managers, the traders, the investors are going to want some kind of a process to figure out what's going on, what stuff is worth. And you might have people who are simply doing paid research for that sector, right? So you could do a subscription type service. And you can think of lots of other ways in which you could use this kind of public analysis, public data access to build a business. These are just sort of some examples of things that map fairly well to the real world, both in normal finance, traditional finance, and what you see. All right, so tooling. All right, just dig into this one a little bit. You can build tooling for regulators, law enforcement, for the government. And the government's a big buyer of software everywhere in the world in general. And they're also often buyers of training and consulting around that software, whatever, answering those kinds of questions. Those are interesting questions to deal with. Those markets grow however those markets grow. There's only a certain number of countries and police forces in the world, but digital asset use goes up. You can see people deciding they wanted to focus on meeting that kind of a market. Private parties, right? So crypto exchanges or trading firms, lawyers dealing with people who are trying to do asset recovery, all of these guys may want tools to help investigate what's going on, what might be going on. You can imagine compliance where a project is putting together the equivalent of an IPO type situation. So they're going to list a token, no discussion about securities, just in general. They want to list something, they want to have documentation. You might want somebody to go through and look if their code, if their transactions match what they say. There's audit firms that do that kind of thing. Then you've got people who are accused of things and want criminal defense. You have people who are suing each other for fraud. You have companies that go insolvent. FTX, probably the most famous, crypto insolvency in the last couple of years. Lots of investigation, analytics, consultants, that kind of thing. And then you can just build tools for for-profit market participants. That looks like regular finance, where hedge fund, mutual fund, whatever broker wants to pay money for stuff to help them provide their clients with what their clients want. Pretty standard stuff. Okay. So explaining things. This is another sort of branch of what you could do. You can explain to the public sector or the private sector. It says usually lawyers under private sector. Public sector, you'd think it would also often be lawyers or some sorts of law enforcement. And this again looks like maybe consulting, maybe legal assistance work, helping to explain things to people, helping to decipher testimony, decipher data. On a very basic level, even a decade back, the police would arrest somebody that they thought was involved in money laundering using digital assets. And you got the guy's laptop and you have a bunch of thumb drives. What do you do with it? So at this point, law enforcement has tools and procedures, but all of that had to get built. Somebody had to figure out not only how to do it, but how to make it something you could train police and forensic investigators to do at scale. And that means having a process, documenting a process, making it admissible in court, all of that kind of stuff. Investors come to us with questions, often second opinions, because investors like to do their own work. They don't like to just subscribe and blindly follow what they read in somebody's newsletter or blog post or whatever it is. But you'll have people come in and say, I want to invest in this project. Somebody pitched me this token, whatever. And there are people who are interested in understanding if they're being told the truth. If it's, not should you buy it or sell it, but what does it do? Are they lying to me? That kind of thing. Journalists. So I'm sure everyone on here has read a couple of stories about digital asset oddness in the newspaper. We'll come to some examples shortly. Journalists care a lot. We and every other firm that does anything like this gets a reasonable number of questions from journalists of all sorts, asking all kinds of different things. Again, you have to ask yourself, is answering journalists' questions a business? think about that when you're considering what's going on here. And then the actual public, right? So there are plenty of people, if you're active on Twitter or if you read any blogs in these areas, the rest of it, there's a lot of people who talk in public an awful lot about their analytics tools, what they've found, investigation results, blaming people, finding money, trading signals, everything you can imagine. Is providing information to the public a business? Is it a marketing exercise? Is it a reputation laundering exercise? Is it, performance art? Right? It could be just about anything. You have to kind of, as with every other market and I guess area of business in the world, you have to question kind of what's going on end to end. So what we've just gone through here, there's a lot of similarities to things in traditional finance, right? So, large accounting and consulting firms, to some extent, is KPMG, a consulting firm like that, is that a third party when it's being engaged as an auditor? Well, it's supposed to be, right? Is it a third party when it's engaged as a consultant to help design the business? Not really, right? So the same kinds of questions appear. Similarly, specialist investigators, right? So you've got people who focus on asset recovery. There are law firms and other firms that focus on, looking for people's money. And this ranges everything from looking for assets in divorce proceedings, insolvency proceedings, corporate merger problems, all of that kind of stuff. Right? Activist investors, right? So there are definitely people who buy the shares in companies and then agitate for changes to those companies, right? And those people need to know inside and out how that company works. You can imagine somebody trying to take over a token project or push for changes in the code, something like that, based on public data. It's a very similar kind of situation. Then you've also got short sellers, people who do whistleblower filings. All of that stuff is exactly the same as traditional markets. It's not to say that analytics firms do that, right? It's to say that they may support people doing that. They may themselves do that. You can think of a trading firm with a large developer and research operation that's suing people and making filings. Is that an analytics firm? Is that an intelligence firm? Is that a forensic accounting firm? Is that a hedge fund? These are sort of vocabulary questions that don't have very obvious answers. And then you've got, the trade press, right? So there's 4 examples on here. This stuff gets published as the amounts of money get larger and larger in larger and larger publications. And people care about that. Bloomberg sells data tools to people in analytics. Fortune, Forbes grants. So these are subscription and advertising funded media publications. Finance is somewhat unique in that people really still will pay for subscriptions to things, and that you often see overlap between data and software providers and media, right? You don't really see people who are covering the pharma industry and building DNA testing machines. Right? Those are very different things, whereas there are plenty of people who build analytics platforms and cover digital asset, whatever, analytics, data, signals. Again, because the number of use cases from a single data format is much larger, you tend to get more overlap. Right? And then you've got just the traditional large software providers. There's 3 examples here. Some of these people do actually offer blockchain-focused backend database software, whatever. There's lots of other firms in those areas that make software for all kinds of things. They may have done traditional finance for a long time, added a blockchain product. There's people who build blockchain-related trading stuff on their own. If you can process trades and you have some kind of historical records of trades, you've got a basic analytics platform, right? So to some extent, all of those people would fit within this umbrella, right? If you're just selling trading software to people, you're a little bit of a third-party analytics firm. You can add tools at least to that product. And then there's consulting services, which exist all over markets all the time. Now, okay, most published news you see in traditional finance is negative, right? And I think the key reasons that happens are about people, right? So people buy newspapers to read negative stories, right? And companies do a very good job promoting themselves. So there's no trouble getting positive news about your company or your token project or your blockchain or your exchange, right? These are generally not things that need a tremendous amount of assistance. Yes, there is public marketing and investor company CEOs do TV interviews to promote their business. All of that stuff happens, but most of the stuff that comes out, it's real meaty journalism, is not positive. That's a sort of a feature of the way these things work. And you would not expect things to be very different in the blockchain area, right? Generally analytics. Now, it's worth noting that in regular media, people, these business models often struggle because, people enjoy, I guess they still pay for celebrity news, although that's probably still all advertising funded. But it's well known that around the world, newspapers are struggling. Real journalism is struggling on a revenue front in general. Again, finance, digital assets as a part of finance are a little bit unique in that people will pay more money for actionable information, right? So that's a little bit of a thing. Again, running a media publication that either runs paid promotions for companies about themselves or runs negative news that gets eyeballs, that's not a thing that's run for the public good unless it's a charity, right? So there's a reason that's happening. Is it selling advertising? Is it selling whatever subscriptions? There's a reason these people are doing that. And there are a reasonable number of media organizations in the blockchain digital asset analysis area that have non-trivial analytics platforms associated with it. So this is, you can think sort of, if you're familiar with Bloomberg, Bloomberg has a large software offering and a large media offering. A lot of digital asset companies in these areas look a bit like that, where they have a fair amount of news and a fair amount of software and data. Now, in traditional finance, right, and you need to get your data from somewhere to do analysis, right? So I was a derivative trader for a long time. One of the key problems you have there is you have access to your quants and your models and the market data, the pricing that you see. And from that, you have to cobble together what's going on in the world. You know what trades you've done with your customers. You know what trades customers asked you about but didn't execute. You don't know if they traded with someone else. And you know some amount of pricing information. You can go buy pricing information from exchanges. You can download free futures histories, whatever. Now, when you've got these more complicated public data structures with all the transactions on them, in principle, anyone can check anything. These things are complicated enough. Bitcoin is what, 15 years old, and there still are not that many people. Right? It's less than basis points of the overall population that could actually interpret the raw data themselves. You need software to help with it, and you need abstractions over that for people to help build things. Right? So a fair amount of tooling is needed that most people can't build. Even, again, going back to derivative trading, the top couple dozen banks built their own software, had their own quant teams, their own developers, and below that, most banks bought vendor systems to do most more complicated products. Over time, what becomes commoditized changes, but always only the largest players have enough staff to sort of do this kind of work themselves. So you end up having to buy it from somebody, or just guessing, or just reading the free version, right? Now, there are free public blockchain explorers with which you can do very limited analysis. You can pay for fancier tools. You can build your own fancier tools. It's a wide spectrum of things that you can do. And as with all software, there's huge efficiencies from scale, from having a single database, a single set of ingesting data, reformatting data, tagging data, checking data, and then having a large number of users, right? And you see this in software all over the place. It's not just finance, right? The social media platforms. It's quite well known that software has tremendous efficiencies from scale. Now, analytics firms in traditional finance and in digital assets are often seen as sources of negative or primarily negative information. Right? Talked about this a little bit before. It is very rare that someone finds secret information in a public company that means the stock price should be a lot higher. Right? Companies lie about their bank balances by overstating them, not understating. I mean, that happens more than never, but it's not generally a problem. Companies are very good, and investor relations teams are very good at pushing and putting positive information about themselves out into the world. There are activist investors who will invest in companies, agitate for changes. I guess it's an open question as to whether a hostile takeover is a positive or negative thing, because it's supposed to make the stock price go up, but the name isn't very positive, whatever it is. And you see the same in blockchain-y things overall, where there's very little information that the team hasn't provided themselves that's positive, right? Most of the information the team hasn't provided is something they don't want to talk about, mistake, covering something up, whatever. same as normal companies. There's really no reason to expect that's different. If you hear or read the phrase governance attack, right, that's the digital assets way of saying someone got enough tokens to vote through a proposal they want, which is just a hostile takeover. Right? It's the same concept. If your governance attack, which is an even more negative sounding term, is focused on realizing value for the stakeholders in the system, that sounds negative, but it's probably not best viewed as negative. It's a relative moral judgments are outside the realm of blockchain analytics. And then you've got sort of victim advocate investigators, we've called them here. So these are people who will talk to scam victims. It's well documented if you've looked at any of the stuff in media that there are lots of scams. It's not specific to digital assets. There's scams all over the world. But there are a lot of scams here. And because the records are public, a investigator, sometimes even using very, very basic tools, can ask someone, where did you send the money? And then they can do some looking as to where the money went. Right? Sometimes you can do that well. Sometimes you can do that poorly. Sometimes the money's easy to recover, hard to recover, whatever, complicated. You can do preemptive surveillance. Right? So you could be, we've had this before, this person wants to deal with us. What do you think of this address? What do you think of this service? Do you think this is a scam? We're getting a bad feeling from these people's documentation, whatever, do that type of work. And this one is really complicated because perhaps, I don't know if this is the saddest or the most amusing part here, there are also fake recovery companies. So there are people who look for scam victims and then scam them by selling them expensive asset recovery services. Right? And I don't mean they took some money from someone to go do an investigation and it didn't result in recovery. That could be a scam, could not be a scam, could be life, whatever. It's complicated. I mean, actual people have been arrested for running proper scam recovery firms that just take the money and do nothing, or provide only the thinnest and simplest of publicly available information and attempt to cover that up. And this one is interesting because you see some of these are private. There are some ex-government officials running things that are borderline charities working in this area. There are industry-funded versions of this alongside the scams. On the industry-funded front, it is interesting to note that there was a well-known pharmaceutical fraud, Valiant Pharmaceuticals. This is a Netflix documentary. This is a very well-known collapsed fraud. And one of the things Valiant was doing as it jacked up drug prices on people to degrees that, watch the Netflix documentary, they were donating money to charities that helped the sick people pay for more expensive drugs in an effort to set the higher price so the insurance companies would pay them the higher price. So you see interesting collections of things here. You see parts of industry funding scam recovery efforts, and the funders are the people who ran platforms the money was scammed off of. So is that, you want to be cynical about that or not? It's complicated. Right? There's a lot of different things that could be going on there, but it runs the range from people feel bad, they know their security is not perfect, to whitewash and everything in between. So I guess what we can see at this point is the third parties is complicated. Right? So if you are a company that sells software or investigation services to exchanges, right, are you really going to want to, well, certainly publish negative information about your own clients? Probably not. Are you going to want to answer the police's questions? Now, we're not suggesting people lie to the police, just that, this is complicated, right? If you don't have the information, how hard are you going to go try to get the information to cause trouble for someone who's providing you with revenue? That's not a crypto, Web3, digital asset, whatever problem. That's just a life issue in general. Right? Just because the data is public doesn't mean the people you asked to look at the data are completely unbiased. Right? And again, as is very well understood, bias is often not conscious and can still be an issue. You see from time to time public spats between large digital asset companies, often exchanges, fund managers, and analytics, research, whatever, journalists. Are those spats, because a mistake was made? Are people sort of talking their book, such as it is? It's complicated. If you're a hedge fund trading physical commodities, you don't have to provide information to anyone. And as long as all the public statements you make are true and don't involve stolen information, you can, in North America, Western Europe, whatever, you can publish basically anything you want that's negative about a company. Right? So these are the same kinds of complicated issues that we see already. And of course, there are allegations that, what is it, short and distort, right? So there are claims that people run effectively scam certain companies in that direction. Okay, complicated, right? Um, there are also people in the digital asset area that publish paid research. Jack Grubman is a famous analyst from the dot-com era who was very bullish on every company that his employer was trying to sell the stock of, right? Okay, those are not third parties, right? Nobody would have thought bank equity research was a third party at that time, and you really shouldn't think a lot of paid research, particularly if a company's stuff is all positive. You kind of want to ask yourself if it's a marketing firm or if it's actually a research firm, again, because most companies do a good job of putting out public positive information about themselves. So we talked about this a little bit earlier. You can view some asset recovery efforts as, an industry coming together to try to help people who were wronged. You can also view it as an industry that generates a lot of environmental pollution, providing a small amount of their earnings to finance cleanup efforts so that they can continue running that industry. That's the very negative view. The former is the very positive view. You want to think about what role everyone's playing in here. It's complicated, right? Who's even a third party can be hard to assess. Right? People often view some parts of this as positive as opposed to negative. Helping scam victims feels positive. Obviously, scamming scam victims sounds positive at the beginning and then turns out to be negative when it's realized it's a scam. But that securing liability protection for your employer by helping people, right? That's a thing, right? So it's interesting to note when digital asset companies team up with service providers and provide positive information about those digital asset companies, how seriously should you take that, right? And if a platform is leaking assets to scams, I mean the user's assets are leaking to scams, is there donating to efforts to recover that money instead of just fixing the problem, extent to which it's fixable? How real is all of that? These are complicated questions, but these are the questions that sort of concern the role of third parties in these kinds of markets. Now tooling. If you build software, people will only use your software if it works and if it's easy enough for them to figure out that it works, right? And that's why you often see a lot of what I would describe as marketing efforts. We'll come to some examples in a moment, where people are publicizing how they've found some problem in which they don't have any direct financial interest in an attempt to show that their thing works well, right? So that people will buy it from them. That's a common thing. Now, being completely dishonest and disingenuous in your public statements means that people won't trust you. Your reputation will be bad. Your software won't sell. Do you have a little bit of room? Maybe. Sure. Right. Similarly, you can decline to comment on certain circumstances if you think it's bad business. Again, these are just common issues to every industry. Helping journalists, right? So sometimes this is done because the journalist has information you can use. Sometimes this is done because it's good marketing, right? Why would you deal with that stuff? So we're going to come to the example of Huion in a few moments. Huion was a Cambodian payment services company, payment processor that's subsequently been shut down. 100% of the coverage that began roughly 2 years ago regarding Huion and digital assets was negative about how they were used by scams, used by terrorists, whatever. I mean, Huion wasn't paying for that. Right? No one thinks they were paying for it. Why was that being done? Some of it was probably government pushing. Some of that was showing that you were at the sort of the forefront of how that's going on. How great are you? Getting government business, getting trading firm business, getting surveillance business. Or for entertainment or information out of journalists, whatever. But, why would people do that? Similarly, when there's a large hack or a crime, you often see people coming out and publishing very detailed postmortems. Right? The money's already gone, and you didn't manage to stop the theft. Maybe you're a third party and stopping the theft wasn't your job, but still you didn't stop the theft. No, that's often done because people in finance don't get to read about North Korea very much, so the stories cover. They get a lot of reads, and it's a good way for people to develop tools, demonstrate their tools work, show methods, things like that. And then you've got activist investors who find problems and publish it for whatever reason they publish it, like normal finance. That's a normal thing, right? Touched on this a little bit earlier. How reliable is a lot of this stuff? Anybody that did equity trading 25 years ago will remember. I mentioned Jack Roman earlier. Bank equity research does not have a wonderful reputation. Most equity research is not done within banks anymore. So you've got first party promotion that's very positive. Second party, they're engaged groups very positive, and then you'd expect the other stuff to be primarily negative. Does that mean it's all correct? It's complicated, right? But that's sort of where we are. So as with everything, you should assume most stuff you see that's positive is put out by the person it benefits. There's a lot of negative stuff you don't see, and that these things are all businesses of some sort, right? Of some sort. There are actual charities. Whether a charity is a business is a vocabulary question again. And media similarly is doing that. There are publications in finance famously that run hard-hitting negative reporting and advertorials, right? That's just the way a lot of this stuff works. I think I'm going to skip ahead a bit for time here. Yeah, okay. So we're going to go through a couple of real stories just to touch on how some of these things work. So BUSD. So this was Binance's stablecoin product that existed until early 2023. Binance had a relationship with a trust company called Paxos. They produced a stablecoin. Binance was doing some not okay things with this stablecoin. That information was published in the financial press, totally third party. And in short order, it had about 20 something billion dollars inside. In short order, the government, the New York Department of Financial Services, canceled the license, shut the product down, and subsequently there were a lot of actions against both Binance and Paxos, its business partner there. So I am actually the one who published that, and I can say that that was mainly done for entertainment, because it was astonishing, having built some simple tools, to find that that was unknown, and I was trying to figure out if it was unknown, right? So I did have a reason. It's just that my reason was not, I guess it was to determine if that might turn out to be a business. Maybe that's a business, I don't know. When you build the software, you get a result, then you ask the question. Right? So Bybit, large exchange, was hacked recently. Enormous amount of money was hacked out of Bybit, about $1.5 billion at the time. You could see the stolen money flowing from place to place, and then you had a feeding frenzy of analytics, investigators, surveillance, whatever, showing where the money was going, publishing lists of where the money was, asking services to seize people's funds, block people's funds. Services changed their policy to go from no blocking to blocking, all kinds of things like that. Why did people do that, right? You can, it was an interdicting crime in real time on an opt-in basis, right? The James May in your community. Why would people do that? Are they just trying to help people? Are they trying to make their industry look safer because it looks really bad when $1 billion gets stolen by North Korea? Complicated. Certainly, publishing where the money was going is a social good overall. But if you're trying to cover up for the fact that you allowed that to happen in the first place, that's not ideal. So it's complicated. It cuts both ways. Huion, we talked about earlier. There was widespread reporting in all kinds of media about terrorist use, North Korean use, all kinds of things. People telling large digital asset service providers, publicly and privately, that they were dealing with people they shouldn't be. Governments in all sorts of areas asking all kinds of people questions to look at things. Eventually the service was shut down. The U.S. banned it. The license was retracted in Cambodia. Whatever. It took a long time. Were the journalists leading the analytics people leading law enforcement? Did the journalists figure out what was happening and then go back to try to prove it? Did the police leak to the journal? Who knows? Right? It's complicated. What was going on there? Right? But certainly it's interesting. And then there are so recent ICIJ series that's come out that discusses kind of widespread problems at very large digital asset firms. These are companies that have billions of dollars and have their own teams. So, what exactly is going on, right? The journalists are clearly interested in influencing policy and getting eyeballs, right? Other people are involved because they want to improve their products, they want to influence policy. Maybe there's some marketing here. When stuff doesn't work in finance, it often has a wider impact on society. So sort of a very, very brief summary, right? There's lots of different things third parties can be trying to do for different reasons. Journalists and law enforcement are always interested, and it's often more effective to publish information. Enron famously, right? The stock was a pretty straight line to zero after Bethany McLean's reporting came out. That's often easier than advocating privately for things. Right? So, all right, I guess that's fine. So this is relatively similar to traditional finance, except that you have more information, but fewer disclosure requirements. Right? So that changes the nature of the questions. Third parties can do different things they couldn't before, but then, they're not, team doesn't have to provide as much information as a securities offering. So to make it better or worse, or more or less transparent in that sense. Okay, I think we can probably do questions. This should be okay. So let's see, we've got 13 minutes. So, yeah.
Thank you, John. Very interesting and fascinating talk. That I'm sure that it generates quite a lot of questions and from our audience. I didn't see any questions put in the chat, but we still have time. We have 12 minutes for our audience to ask questions. So you're very welcome to raise your hand, unmute yourself, and ask a questions. But before you do that, please, may I ask you to identify yourself, who you are, and your affiliation before you ask the question. Anyone would like to ask question? Rachel.
Hi, yeah, I work in IT services at the university. I'm really intrigued to know what made you move from traditional finance into kind of the Web3 space.
Okay, so I was a trader and a quant back when you could be a trader and a quant at the same time, right? Pre Sarbanes-Oxley and whatever, those things were still merged. So I was asked by some people I had worked with in finance before to do some quant related work, and found that some things some people were trying to do did not seem possible. I was asked to do something, couldn't figure it out, and eventually thought, well, maybe that's not a thing you can build. And then began investigating stuff from there, because it was interesting to see. There's often the joke that crypto is speed running the history of finance, and that's true to some extent. It also means that you can make predictions that look like predictions about the future, but are actually predictions about the past. Right? So it's fascinating. And a lot of things that seem like obvious businesses now are in fact obvious businesses now, because it's exactly the same thing that you could have done 30 years ago, 20 years ago, 40 years ago, whatever finance. So it's it's interesting and lets you redo stuff in ways that, I bet I could have thought of that model. Oh, now I can be the one who introduces that model.
Yeah. That's really cool. Thank you.
Any question? Anyone? But if not, I'm going to ask another question. So Rachel asked about, why you moved from TradFi to kind of DeFi, let's say, space. I also noticed that recently that Chainargos has filed an amicus brief in the US in support of Roman Stalingov, who has been convicted in the US for running a mixer service that is called Big Fork. The function of it is to obscure Bitcoin transactions on the blockchain network. And Chainargos filed an amicus brief in support of he's appealed against the convictions, and I have quickly just read the case, and but I was wondering, what was your motivation and why did you want to? We talk about, a lot of third-party analysts that use that for promotion, for marketing. Yes, and also, I mean, there are competitors in this case. I'm just wondering, why did you decide? I mean, not you, but your firm decided to file that case against, especially it is actually a rather controversial case. It's about it's about running a mixer service, and you are in the blockchain intelligence markets. That yes, if you don't mind to share with us what's the motivations or the firm filing that case?
Sure, sure. So it's a somewhat unique case in that normally when mixers, privacy services, obfuscation services are in the news, many digital assets people are trying to explain how that type of software should be legal. They think it doesn't fit with the rules, whatever it is. The main point of contention in the Bitcoin fog case, and what our amicus focuses on entirely, is nothing to do with that the service was legal. The defendant's claim was, I'm not the person who did this, right? So, okay, that's a different sort of case, right? It's not the murder didn't happen. It's, I didn't do the murder. Fine. So, that's interesting. It's different than the other cases, and the issues will be different. They're much more about the scientific basis of the evidence. Right? So, look through, read the transcript, get the documents. And it kind of stuck out that some of the expert witnesses testified that their procedures had 0 false positive rates. And as anyone with any real experience in much of the real world knows, I did some radiology physics a very, very long time ago. 0% false positive rates are just not, those are not real systems, right? That seems unlikely to be a good characterization of what's going on. And you look at some of the related work and you find that the false negative rates are like 20%, 30%, very, very high numbers. So I thought I'll sit down and take a look at how reliable this methodology seems, right? Because it was a Bitcoin case and there's a lot of Bitcoin tracing you see in the news. And what you find just reading the basics of how the stuff works before even digging too deeply is that it's a good way to find leads. If someone is murdered or attacked, normally it's a family member. That's well known all over the world. But it doesn't mean that you can just arrest every family member, right? That's not how this works. Spouses are often left, right? But it's a good way to find leads, and then you go question them. And it looked like a lot of these tools were very good ways of finding leads, and then people were just asserting, well, we found this guy. We've now seen this in many cases where there's a whole bunch of leads and only one of them has identity documents at the exchange. So they just arrest that person. That's not science, right? And there are a lot of people who've built a lot of tools on this because if one of the leads pans out, the government gets a win by convicting because you catch the person, you find evidence. This is a case where the guy was arrested with a lot of thumb drives on his possession, none of which had any corroborating evidence. Right? And we thought it was important to talk about the difference between, this is a good way of finding leads, and this is a good way of concluding that these two digital asset, whatever, addresses, tools, wallets, pieces of software, are owned and controlled by the same person. Because a lot of this is driven by software developers that they find a solution and it works for their use case and it's fine. And then the software breaks when someone tries to do something new with it. Everyone that's ever used a computer is familiar with, you use the program in a way that's not expected, it crashes. Right? And this looked very much like a case where people were excited about finding tools that were good at one thing, but they weren't really okay at other things. And, sending people to prison for many years on the basis of tools that have a 0 false positive rate, which cannot be true in the wild. And of course, it's not true in the wild. We found all kinds of scientific forensic evidence type issues, which is what the amicus brief is all about. Sort of to try to make a lot of this more rigorous and more scientific. It took a long time for DNA evidence to get sort of sorted out and digested and packageable for a jury in a standard way. In blockchain analytics, people make up their own methods and just describe how they work to the jury, and that's that. And I didn't take organic chemistry. I'm not qualified to evaluate if your DNA testing machine works, nor would any judge allow that to be presented to me. So, that's where that came from.
Thank you, John. Any other questions from our audience? Don't be shy. John, you raised that we were talking about third party, the role of third parties, and in traditional finance, in corporate governance, we see lawyers, auditors, financial analysts. They are supposed to be sort of trusted third parties in the market and providing that kind of independent and to support the governance of the of the capital markets, of the corporate market. And I think what you have said raised the issue that there is that element of conflict of interest between the blockchain providers and the users, be it investors, stable coins providers or digital asset providers or victims, and or to a certain extent, the law enforcement agencies. And in law, in corporate law and financial law, we've been trying to introduce rules, governance system to make sure these third parties or trusted third parties remain independent, to make sure that the potential risk of conflict of interest can be mitigated. So what do you think that should there be some kind of standards be introduced, some kind of governance models or code of practice, conduct of business for blockchain intelligence providers, and who should set that? Should it be, for example, in the US, the CISA, or in the EU, the NIST, or in the UK, the National Cybersecurity Center? What's your view on this?
I mean, so something certainly needs to be done. I mean, we routinely have situations where lawyers are asking us to explain how software works, and software is often complicated because it's software, and that's the way it is. And lawyers are used to, and I'll say my experience now, lawyers are very good at figuring out the right questions to ask to get at the crux of the issue of how something works. But a lot of this stuff just is quite complicated and different and mathy, and lawyers are not really math people. So, is it right for the lawyer to simply take the way I describe software, or ask two people, get the same answer, go with that, when they're not able to independently evaluate it, right? Because it's just outside their skill set, the same way that DNA evidence stuff is outsourced to people. That's challenging. You also have situations where, say the team claims that their product is decentralized, but the way they describe their software to their lawyer makes it sound decentralized, but it's not really. What's supposed to happen now? Who's supposed to figure that out? Which investigator, which is probably a lawyer or police officer, is going to go work out if they lied to their lawyer about how the software works? All of that needs to be handled differently. Again, go back to the DNA example because it's quite straightforward. If you just retest the sample, right? So is this a case where you simply have to have people who get certified and retest the sample? That's one way of doing it. Another way of doing it, and what I think is probably best given the expense required to build the tools, is to allow more private enforcement of regulatory type things. Right? So if I can prove a sanctions violation, let me try in court to prove it at my own expense and collect a part of the fee. Right? And that will get that tool and methodology validated by the court at the expense of the guy who developed it. That gets the government out of the business of picking software explainer experts and government lawyers and police officers learning how software works. That, I'm not saying these people aren't intelligent. I'm just saying this is not the thing. They don't do the lab work. The coroner is people with different backgrounds than line investigators. Right? So that's something like that. I personally think is the correct way forward, but something has to happen. Because you can't have a situation where a bunch of developers misrepresent what they did to their lawyer, who files a bunch of forms with the government, and many, many, many years later, long after all the money's gone, some effectively financial coroner shows up and works out what really happened. That's just not good for anybody.
Okay, so thank you, John. It's 1 o'clock at UK time, so we have to bring this to a close. But as John mentioned about governance attack, the 51% attack in his talk. Just want to let you know that we will also have another webinar in the new year talking about governance attack. And then I think that what John has said has really it's a precursor of what we will be talking about in the new year. So do watch the space and do follow us. And well, thank you very much, John, and for your talk. And then